All right, let's dive right into this explainer. Look, if you've been keeping an eye on the secondary market this week, you already know it's been a rough ride. Today, we're going to break down that recent NEPSE volatility, and then we're zooming way in. We're doing a full analyst-style deep dive on Ridgeline Energy Limited. We're cutting through the noise and looking strictly at what the data actually says. Here's our roadmap for today. We're starting with the macro by decoding the NEPSE drop. Then we'll look at Ridgeline Energy's project scope, dive into their financials, decode their moderate issuer risk, and map out the technicals and pivot points. And to wrap up, I'll give you a reusable hydropower stock evaluation guide. Okay, part 1, decoding the NEPSE market drop. So let's address the elephant in the room, the broader market index. Because, to understand a single stock, we really have to understand the sandbox it's playing in. Here's the big number. Investor wealth shrank by an absolute staggering 23 billion rupees in just 5 trading days. That pulled the total market capitalization down to 4.659 trillion. As for the NEPSE benchmark index itself, down 13.71 points, or about 0.5%, closing at 2,731.94. So yeah, this isn't just a tiny blip, it's a massive contraction of capital, and we definitely need to talk about it. Now, what is actually driving this? Just to be totally clear, we are staying entirely neutral on the politics here. But objectively speaking, market analysts are pointing directly to ongoing political uncertainty and some recent high-profile arrests. Those are the specific events making retail investors super hesitant to jump into the secondary market right now. And it's causing a real shift. We're seeing people actively pull capital out of high-cap sectors, especially hydropower and hotels, just to book their profits and play it safe. But here's where it gets interesting. Look at how technical analysts are reading the tea leaves right now. Even with the drop, trading volume actually spiked by almost 8% up to 18.47 billion rupees. Analysts are basically calling this a wait-and-watch phase. They've identified a really strong technical support zone between 2,680 and 2,700 points. A lot of folks are just waiting to see how the market reacts to the upcoming budget announcement. So the smart money? They aren't panicking. They're just sitting on their hands, waiting for the perfect entry point. Moving on to part 2, Ridgeline Energy Project Scope. With that macro baseline established, let's zoom in. We're using Ridgeline Energy Limited as our case study today to show you how to separate all that daily market noise from actual fundamental value. Their flagship asset is the Super Chapey hydropower project. It's a run-of-the-river plant over in Gorkha with a 9.05 megawatt installed capacity, generating about 45.75 gigawatt hours every year. But here is the major takeaway, cost efficiency. They completed this for 209.6 crore rupees. That breaks down to about 23.16 crore per megawatt. Plus, they've got nearly 31 years left on their generation license. So we are talking about a long-term structural asset pumping directly into Nepal's national grid. And their execution timeline is pretty solid, too. They locked in their power purchase agreement back in 2018, commissioned the project in July 2023, and hit their commercial operation date, which is when they actually start cashing checks for electricity, in January 2024. But if you're a retail investor, you really need to circle this date, February 2029. That is the magic unlock date for promoter shares. That means company insiders literally cannot flood the market and dilute your shares for another 3 whole years. Now, you can't just judge a company by its first project, right? Ridgeline knows this, and they are aggressively expanding. They are pouring capital into 2 brand new projects. They've already dropped 50 million rupees into the 11-megawatt Dudhpokeri Chepe project, and they're investing heavily in the 17.85 megawatt Upper Maiwakola project. That is a massive boost to their long-term megawatt footprint. It shows they're definitely not just resting on their laurels. All right, Section 3. Analyzing Ridgeline's financials. Let's peek under the hood at their balance sheet. Because sure, generating power is fantastic, but are they generating sustainable wealth? Looking at these disclosures, Ridgeline pulled off something you almost never see in the hydropower space. Usually, these projects are just completely drowning in early debt. Ridgeline started at a 67-33 debt-to-equity ratio, but through an equity injection and some incredibly smart management, they wrestled that leverage down to a perfect 50-50 split in their very first full year. That is a huge reduction in financial pressure. For all of us retail investors, these are the vital signs you've got to watch. In their Q3 report for fiscal year 2082/83, they posted a net profit of 93.90 million rupees. That gives them an earnings per share of 10.57 and a really solid book value of 125.06 per share. It proves they can hit sustainable profitability in a sector where most companies honestly struggle to make a dime early on.
But, okay, here's where we hit a bit of tension in their strategy. On one hand, they are offering some really generous early returns. They already paid out a 5.26% cash dividend and proposed another 8.42%. That sounds awesome, right? But on the flip side, they are aggressively deleveraging. They're taking 11.7 million rupees straight from their IPO funds, specifically to pay down debt. Now, long-term, this drastically lowers their risk. But analysts are warning this might temporarily pinch future shareholder payouts over the next few years, since that cash is going straight to lenders instead of your pocket.
Section 4. Decoding moderate issuer risk. Okay, before we even think about stock prices and buying, we absolutely have to talk about credit risk. Like, what are the chances this company actually defaults? Ridgeline just got an official rating from Care Ratings Nepal. This is completely essential terminology for any investor, so let's make sure we totally understand what the certificate means for you. So they were handed a Karen PRBB rating. Let's translate that into plain English. It basically means they carry a moderate risk of defaulting on their debts. So it's not some top-tier risk-free golden ticket, but it is absolutely not junk status either. It's just a realistic, middle-of-the-road risk profile.
So why did they get a moderate rating? Well, it mostly boils down to the inherent risks of the hydropower sector. Because it's a run-of-the-river project, they generate way less power during the dry season. We're talking a 32 to 68 dry to wet generation split. Plus, they're physically located in an area vulnerable to floods and landslides. They're also exposed to Nepal's floating interest rates, which can really squeeze profit margins. And, maybe most importantly, they're currently on an NEA contingency plan using a take-and-pay modality. So their revenue is just a little less rock-solid guaranteed than under a standard agreement.
Moving on to Section 5, Technical Analysis and Pivot Points. All right, we've got the fundamentals down. Now let's throw on our market analyst hats. The stock literally just took a 14.79% hit in a single week, closing right around that 1,000 rupee mark. If we check the short-term moving averages, they are flashing bright red. The 5-day is sitting at 166, and the 20-day is way up at 1,190. Since our current price of 1,000 is sitting below both of those lines, it's screaming bearish momentum. It perfectly mirrors that downward pressure we saw in the broader NEPSE index. The trend, for sure, is pointing down. But how do we actually use that data? We map out actionable technical levels. Our baseline pivot point here is 1,004. So if you're looking to buy the dip, your immediate support is at 978 rupees with a deeper bargain entry point at 959. On the flip side, if you're already holding and want to secure a quick profit, your first resistance target is 1,023. This right here, this is how you trade with structure instead of just guessing on emotion. Finally, Section 6, the Hydropower Stock Evaluation Guide. Let's tie this whole explainer together into a simple, repeatable playbook. You can literally copy-paste this framework for any energy stock out there. If you stick to these 4 steps, you instantly go from an emotional trader to a grounded analyst. Number 1, check the physical scope and timeline. Number 2, dig into the balance sheet. Are they paying down debt or are they drowning in it? Number 3, look up their credit risk ratings so you know the dangers. And number 4, always map out your entry and exit points using pivots and moving averages before you even think about clicking buy. I'm going to leave you with this to chew on. We've just watched 23 billion rupees vanish due to sentiment and a lot of wait-and-watch fear. But look beneath the surface. Companies like Ridgeline are actively generating power, aggressively paying down their debt, and expanding their footprint. So, when the market is paralyzed by short-term anxiety, the real question is, are you positioned to spot the structural, long-term value hidden right there in the data? Thanks for tuning into this explainer. I hope this playbook gives you a serious edge in your next analysis.